the financial services landscape, how that's evolving, and how I think the degree that you're all working on, the MSFE, can position you well to take advantage of some of those trends, though it's going to require some work on your part. I'd also say I don't have, like, there's not a slide in here that says this is how you'll get your job. It's not in here. You're not going to find it. I have some suggestions, and we can talk about that. But I think what I can really help you do is, from my perspective, tell you what the trends are and tell you what those trends mean for students like yourselves who have embarked upon this path to get what I think is an incredibly valuable and high potential degree. So with that, let me just jump one slide to the agenda. And as I mentioned, and as Milena answered, this is sort of a discuss. It's kind of a high level discussion overall. I'm briefly going to talk a little bit about my background. I won't bore you with too many details, but then we'll get into the view of my sense of the spectrum of skills and the spectrum of careers that are available in financial services and data. And I'm going to keep mentioning data a lot because data is becoming, it always was, but it's becoming so relevant to how people approach investment decisions. And then with that as background, try and juxtapose, as I mentioned, the degree that you're all working on to optimize your potential and hopefully your career. And we've got some suggestions. I've got some suggestions from a couple of people who really just graduated from your program a year or two ago. I know some of you have had a chance to speak with either Diane Yoon or Lisa He individually. And then finally, we'll have Sandy wrap up with a process approach, giving you some practical ways to maybe approach this whole issue that we've been discussing. So let me jump to sort of introducing myself, and I can give you a lot of detail on my career. I think the most important thing I can say to you is really it is about the journey, not the job. I know at this stage of your lives, you all think, my gosh, what's that job going to be and how much I got to make and where's it going to take me? And that may work out for you, but I think that's a small percentage that what you start out doing is what you're going to end up doing. It certainly was the case for me. I didn't end up anywhere near where I thought I was going to be in my professional career when I was going to graduate school. And so really the lesson that I learned from that is it's important to be open to new opportunities. It's critically important to be adaptable. And I'll talk about that for a second. And also, this is probably easy to say, but be passionate about what you're doing. Find something that is passionate for you in this area that you want to do. If it's investing, if it's writing code, but find that, and you're going to find that you'll be successful in part based on that passion. And if nothing else, when you're being interviewed for jobs, people respond to that enthusiasm. Let me just real quickly talk about the adaptable part of my career without spending too much time. I graduated about 1 billion years ago with a master's degree in economics, not an MBA. And I ended up working at an econometric forecasting firm that doesn't exist anymore. And the reason it doesn't exist is because way back then, they sold processing time on mainframes. And that business got zapped when PCs came in. So I'm so old, I'm around before the PC was, right? That's how old I am. But the PC came in and destroyed the time-sharing business. It's interesting that time-sharing has now come back as something called the cloud. But the point is that business got zapped by technology. So then I went a completely different way and I ended up working at General Motors, which at the time was the largest corporation in the world, not the largest car company, the largest company based on revenue in the world, bigger than anything that was around. The oil companies, the tech companies didn't really exist as they did today. And while I was there, that was in a steady state of decline. I left there, it eventually went bankrupt. Okay, so I left and I said, okay, I know what I'm going to do. I'm going to go into financial services. That's a definitely great industry. So I went to the largest brokerage firm in the world, Merrill Lynch. It went bankrupt in 2008, right? So far, I've had a business that was destroyed by technology. General Motors got destroyed by a lot of things, global competition, high cost of production, and Merrill Lynch got destroyed by the financial crisis. So my point is there, and I had to sort of adapt. I didn't know what I was going to be employed in this. You have to be adaptable in today's world because I existed over the last 40 years. You're going to exist over the next 40 years. And the need to be able to adapt and reinvent yourself and use the basic skills you have is critical to making this an enjoyable journey because the job's probably not going to be the same thing. Okay? So with that background, let's get into the discussion of this career landscape. Very simple slide here. My PowerPoint skills aren't as good as they used to be, but what I've tried to do here is show a juxtaposition of the range or the spectrum of financial services skills, starting on the left, which I've labeled traditional, and then the category on the right, which I've labeled evolving. The traditional view, my traditional view of the skills in financial services is a very Excel-based world. It's very based on linked financial statements, financial modeling. It's still heavily weighted to the fundamental valuation, whether you use, Graham and Dodd, or whether you use a variety of different people. There's all kinds of great books on it, and you're dealing with public companies. And that's great, and you have to have those skills. But I can tell you that it's an incredibly competitive model, and a lot of the advantages have been competed away. I was just speaking with a person by the name of Perry Boyle, who I'd like to bring in and speak to all of you next year. He's the former head of research, the former head of business development. He was really the number 2 person at Point72 SAC, working for Steve Cohen. And we were talking about this, and he completely agreed. He said that the shift that's occurred in the most productive skill set during his career is completely aligned with this, that the old Excel-based model is fine, but it's very, very hard to have an advantage. How are people looking for advantages? And again, remember, what you're trying to do, no matter what investment category you're working in, is looking at mispriced assets, right? People are mispricing or misunderstanding the value of that asset. So how do you find that today? Analysis of unstructured data. Data is everywhere, more than it was before, and our ability to access it and have cheap processing power and access it with coding is evolving and has moved forward so much in the last 5 years, and you know how to do that. You're learning that. Investment management tools at financial investment firms where I was working my last job at Moon Capital. We had built an internal dashboard so that we could look at everything in real time, constantly, whether it was value at risk, whether it was performance, whether it was just investment size and ranking and upside. But a lot of smart people are now coming up with software programs that offer much more sophisticated investment management tools for portfolio managers, so that in real time, they're looking at every possible variable that affects their investment decisions. The next 2, probabilistic analysis and quantitative assessments of companies and assets. This again moves away from just saying, well, I did a great discounted cash flow, or I've looked at price earnings multiples for the last 20 years, peak to trough. This is more about understanding risk reward. It's more about forecasting, putting effort into forecasting so that you have a pretty good idea about the outcomes. And finally, a lot of investors today, and not everybody can participate in it, are really looking at the early stage, the private side of capital formation, because the view is that their mispriced assets are much easier to find. It's not nearly as competitive. It's harder. I mean, trying to value one of these companies, I'm doing some work on this now, and I was speaking to someone, a colleague of mine who does this, and I said, well, how do you think about valuation? He said, it's really hard. I look at some simple things. Do they have customers? Do they even have revenue? And if they have customers, who are their customers? Because that's important for me to know. And I spend an enormous amount of time getting to know the management, but that's sort of a slightly different skill set than looking at a public company that issues Qs and Ks. But there is a lot of capital moving more and more to this early stage side of end of the investment spectrum, because that's where people think there's a better opportunity for identifying mispriced assets. So what I'm basically saying here is there's a traditional set, and need to know how to do it. You're probably not going to be the greatest investor if you just master this stuff on the left, because your competitive advantage is limited. You need to develop some of the skills on the right, and that involves accessing data, that involves dealing quantitatively with outcomes, and it even involves where you're looking to invest, which is the private equity early stage aspect of things. I guess, Melanie, should we stop for questions, or should we just go through it and save questions to the end? I hadn't thought about this.
I think it's fine to stop for questions. I would just make sure that we don't interrupt the flow too much. So it's up to you, Steve, but I think that's fine.
If there's any questions at this point, I'm happy to talk about it, or we can go a few more slides. But are there any questions right now? You don't have to ask them. This isn't like ask a question to show you're engaged and involved. I'm just asking it because I'm trying to make sure that the material I'm presenting is at least intuitively clear.
And you can go ahead and unmute yourself to ask the question. You don't have to raise your hand.
If anyone's a Zoom master, you can give me a thumbs up to show that you think you understand what I'm talking about. All right, let's go forward to the next slide. This is a really simple slide, and it's probably oversimplistic, but I did want to make the point about how quantitative skills are becoming so much more influential in the management of assets. And so I've done a very simple Excel chart here going back to 2009 through 2021. The height of the bar is showing you the dollars involved in quantitative investing. And by the way, this is just at hedge funds. It's all asset classes. It's equity, it's credit. And what I want to do is just to read you the numbers. In 2009, there was $408 billion that was perceived to be quantitatively managed. Doesn't mean it was pure quant, but there was an aspect to it that leaned towards quantitative. And that was 25% of hedge fund assets. If you move to 2017, that number has jumped to over 900 billion and 30% of quantitative assets, hedge fund assets. And in 2021, that number has jumped again to 1.3 trillion, and it's 33% of hedge fund assets. And the reason this is happening is for the reasons I just showed you on the previous chart. People are looking for new ways to get a competitive advantage, competitive insight, and the opportunities to use quantitative skills, not necessarily just running algorithms and AI, but using some of the skills I outlined on the last page, accessing data, spending time on forecasting, spending time on outcomes, is why more and more people are moving money to what is characterized as a quantitatively influenced approach. Again, this is a simple chart. It doesn't get into all the detail, but it does, I think, pretty clearly show you the trend that I'm trying to identify. So now let's talk a little bit about careers. I've talked about skills and how I think where the skills need to go. I've tried to back that up with some information about AUM, but now let's talk about the actual career. So where do I find a job doing something?
Hey, Steve, sorry, can I had a question actually about the prior slide. So like, as there's this quantification of trading and the more and more algos are there, like, do you think it in a way actually opens up some opportunities for like traditional relative value, like that has been kind of, lost some AUM? And so
sure,
like can the pendulum swing too much in the other direction? And like, how does that sort of fit into the—
Yeah, I think you're right, Howard. I mean, it's an interesting question. So back before the financial crisis of 2008, there was a lot of quant money around. You can see back here, I go to 2009. At that time, though, people were putting assets into their portfolios, and they had no idea what the companies even did. It was pure screening, and they got blown up. And so I think what happened is people sort of reconfigured their quantitative portfolios. They had a fundamental aspect to it too, and that's where this, I think, overused term quantamental sort of emerged, where you cannot completely abandon fundamentals. And so I guess what I'm saying is, if you go back to the slide, even before this one, I'm not suggesting that you can get by not doing, a fundamental valuation analysis or understanding the business model of public companies, or even be able to build a linked financial statement. What I'm suggesting is to differentiate yourself among employers, or to differentiate yourself as an investor, you have to evolve your skills. And my view is that those skills lean less towards some of those fundamental attributes and more towards the programming quantitative side. But you're absolutely right. And it would also, I would also suggest to you, Harry, that let me go back here again, where this traditional page still probably has the most, or traditional sleeve still probably has the most intrinsic value, is in emerging markets. Why is that? Because look, if I'm a traditional person, I've got an Excel model and I'm doing fundamental valuation analysis and I'm covering Apple, give me a break, right? I mean, there's 75 analysts and very talented people with advanced degrees covering Apple, and there's another 3,000, whatever, amateur people who are writing and talking and following Apple. Pretty tough. If you're covering Meng Neo, which is a onshore Chinese dairy company, and even that's a big company, you've got a better chance of using some of the skills on the traditional side to uncover value and mispriced assets. And you can go even more than that. There's an Indonesian company called C, which is the Amazon of Southeast Asia. That's a company where I still think a lot of fundamental analysis needs to be done. So you're right. I don't mean to I'm not saying fundamental analysis isn't important. It is. I just think it's not necessarily enough, and it certainly isn't enough in some more developed and sophisticated markets. So if we jump ahead to slide 6, where I've come up with this spectrum of financial services careers, in talking to some of you, one of the questions I asked is, well, where do you want to be? Do you want to be, first we made a decision between PhD and master's. And I'm assuming most of you here are thinking about the master's degree, not going on for a PhD, because that's a whole different career path that we could talk about separately, but it usually involves going to work at the IMF or the World Bank for a while and then becoming an economist somewhere else. Let's leave that off the discussion topics for now. But if you're thinking of the master's, a lot of you said, well, I want to be more research oriented. And some of you said, I'd like to be more analytics or data oriented, though that's a little fuzzy yet. And I'll try and put some detail around that. But basically on the research oriented side, we've identified, the traditional sell side role, the traditional buy side. So there's a difference between long only and hedge fund. Private equity, I mentioned, first of all, there's gigantic companies out there. It's not new, but I have mentioned that even with established firms, you're seeing more and more of it going towards private equity. In fact, I just read an article about Morgan Stanley is now offering more and more private equity investments to its individual investors through their wealth management business. And of course, traditional banking, IBK is another area. On the analytics side, what's interesting, and I think you've got an example of some students who've experienced this. A lot of the times, if you're considered to be highly analytical, a lot of firms will push you into trading because they've already moved so far ahead in making what used to be a position trader, a human being, using a variety of skills to help make trades. So much of that has been automated and done with algorithms. A lot of it's never even touched. It just goes through, they call it the pipes. It's never even touched by a human being anymore because it's the cheapest way to do it. A lot of people say, oh, you've got a good analytical background, go work in trading. So one of your students, I don't know if he's on here today, Kevin Gao, when he had a summer intern last summer at Morgan Stanley, he got put into trading. I actually got an introduction with research, but he got put into trading. Lisa He, who I worked with at Moon Capital, she's working on the mortgage desk at Citi now, trading. So a lot of times the view of where the quantitative and analytical skills are in the traditional range of careers within a big firm, trading gets put that way right away. The other careers I listed here are not necessarily in one of these big Wall Street firms. In many cases, they're startups. There's data aggregators. There's a company called Sentio. There's a company called AlphaSense. These companies are basically trying to create the Google of financial services. They allow you sitting there to very rapidly pull up every piece of information you can need, but within the financial services space, whether that's word search of documents, research, all kinds of analysis of what's being done about a company, and going through and looking at what's available for this company in a range of different data sources and a range of different ways to analyze it. Some of them fairly sophisticated. There's data set providers. There's companies called App Annie. There's a company called Sensor Tower. These are companies that go in and take data from websites, aggregate it, and then sell it on to investors. And if you were an investor, you have to be sophisticated enough to work with the data. If you're working from these firms, you have to help them pull the data together. And then there's investment management products, which I mentioned a couple of slides ago. There's a company I spoke with recently. It's a startup called Unhedged that is working to build dashboards for investment firms. So on the analytics side, if that's what you're interested, it's right now, it's less about investing and more about using your data skills to process information. But let's take a deeper look at that and see where I think things are going to go. So, this chart, this basic 4-quadrant chart is probably state of the art 1985, but I still think the format lends a lot of insight. And the way I've oriented it is on the y-axis, I put quantitative and fundamental up and down, and across I put Excel-based and data-based. And then I've categorized those two axes as one is analysis and one is information. And really, this is just a visual way of trying to summarize what I've been saying about skills and jobs. But if you remember the jobs I just mentioned, if you start from the lower left-hand corner, which is the most fundamental Excel-based, right? The most traditional, as I did in that previous slide there, and this is all relative. This is just my relative positioning. There, I think you still have banking, traditional capital raising or M&A banking. They are very much still wedded to putting together pitch books that go down to the EBITDA line and say, hey, this is a great opportunity because you can, you're getting this company for 3 times EBITDA, and it has the potential to increase EBITDA by 150% in 3 years. I mean, it's still very much a pitch book EBITDA kind of analysis. They'll get there, but right now, they don't think they've adapted this change. And one of the reasons they haven't adapted this change is banking still has good margins. You know, one of the best ways to become innovative is to see your margins start collapsing and you find ways to make new money. Banking, I don't think has gone through that yet. If you move to the sell side, and again, you all know what the sell side is, it's big firms. It could be Morgan Stanley, JP Morgan, it could be Bank of America. They have individual analysts with teams analyzing sectors and the companies within those sectors. They're also behind in what I think is the trend, which is the upward line on the 45-degree angle towards this more data-based quant quadrant on the upper right-hand side. And the reason they're, I think, less advanced in this area is because, again, they've been doing all these things, financial models, fundamental valuation, and they don't exactly know how to bring some of this data that's being offered to them into their product. And they certainly don't know how to get paid for it, because one of the problems they struggle with, if they go out and buy a big data set from Sensor Tower, because of global compliance, they have to sell it, they have to show it to everybody. And that's not what hedge funds want. They want this data, they want it for themselves to work with it. So the sell side hasn't quite figured out how to use these skills. They will. One firm that is, I think, ahead of the others is UBS Research, that is looking for people with your skill sets to put as new analysts on all their teams when they have some turnover. Now, on the buy side, long only, I'd categorize them more like the sell side. But as you move up the line here, you get the private equity. Private equity is, I think, being more quantitative and certainly more data-based, again, because they have the money to buy some of the data. But when you get into this upper quadrant, as I mentioned, you're going to see trading. I mentioned it already because people characterize that as a very data-intensive assignment. These investment management projects I mentioned, you provide dashboards for investors, and then the range of data providers and aggregators, again, Sentio, AlphaSense. They're all strong, highly in this area. That's a data-based axis and a quantitative axis. I would mention, though, that on the buy side, hedge funds have probably, as the investment perspective, have embraced a lot of this quantitative analysis and data analysis. Again, hedge funds is incredibly competitive right now. Hedge fund returns aren't what they once were, but hedge funds do have money and they're willing to buy data and they're willing to bring in these skills. So again, this is very simple, but if you think of information analysis, in the old days, information was, more Excel-based and analysis is more fundamental based. It's still there, but I think generally the arrow I have put on this chart describes the direction that all of these disciplines are moving to over time. Does that make sense, everybody? So far, are we okay with that? Anybody violently disagree with me? It's okay if you do. Okay, I'm going to move ahead. So now let's take all that background and let's talk about you and a degree that you're pursuing. What does it mean for you? Well, in my view, the MSFE degree, as it says right here, is allowing you, given the breadth of skills you're learning, to participate across that entire chart I just showed you, because you can do all the things necessary to go from being a banker to helping someone develop a startup and create a program that'll help people manage their dashboards. But the good news is that your skills are clearly aligned with what I think is the evolving end of that chart I just showed you. So as I wrote here, congratulations. You guys have already shown how smart you are by picking the degree of the future. But there is a trade-off with that. And the trade-off is that you need to decide, one, where you're going to apply those skills across that spectrum. And that's not an easy decision, because it's great to be out front of everybody, but when you're out front of everybody, not everybody understands what you're doing or what you can do. And I have seen this in different cases, and I had a conversation with Sandy about this just yesterday. We won't mention the firm, but I think many potential employers have not yet figured out how to use the skills that you're learning at Columbia in this program in their processes. So if you think about this chart again, let's just take that last bullet and think about what I'm trying to describe here. Banking doesn't think they even need your skills because they're only going down to EBITDA. Sell side hasn't figured it out because they're very traditionally wedded and they have some compliance issues. Buy side long only will get there, but again, they tend to be more like the sell side in their approach. But these guys, private equity, buy side, hedge funds, they're the ones that are going to embrace these skills more quickly. But if you're interviewing with one of these three categories, you're probably going to end up with them telling you, you probably could find a job with us in trading. That's a great place for your skill set. And that's nothing wrong with that. But you're going to have to make an effort to convince them and explain to them that you're very thoughtful, because I'm going the wrong way, how thoughtful you are and how visionary you are, and how you've already figured out this chart, and that they need to hire you for these jobs because those are where you're going to make a difference for them. But that's a challenge. It is a challenge for this particular program. And, Harry or Linda, you can come in and tell me if I'm being too harsh about it, but your strength is your weakness here. The skills you have are unbelievable, but the world hasn't completely figured that out yet. And that doesn't mean they aren't going to, it doesn't mean there aren't pockets of people to do, but it's not as broad-based as coming in with an MBA, a traditional MBA. At least that's my view. And Melina, I don't know if you want to jump in here or not.
Yes, I just had one point of feedback that, for example, when we had JP Morgan come in and present, when we had Takis Georgakopoulos and Umar Farouk present, we did forward resumes through. And interestingly, on the payment side of the business at JP Morgan, they're still trying to figure out how to place people like these, the students with this type of skill set within an organization that does demand some institutional knowledge of the actual product. Yeah. So sometimes, Steve, the challenge is that there isn't a product knowledge behind the skill set, but the skill set is applicable. And so that's also a tension that has to be dealt with on the banking side. Yep,
that makes perfect sense. I mean, that I completely agree with that. That's always going to be an issue of some of the, the institutional knowledge of the particular products. But that's great that you're getting those resumes in front of JP Morgan. So coming back to you, the students, you need to decide, where you're going to try to launch your career. You've got a good tailwind, but you also need to make sure that when you're talking to these potential employers, they understand how your degree is different, unique, and has advantages. So what are some simple suggestions? I've kind of touched on this already. Spend some time thinking about what you want to do. Do you want to be at the research end or do you want to be at the data end? You have the skills to do both, but you ought to place your time where your interests lie. And also think about sectors and asset classes. I was an equity analyst, an equity manager for all my career. I ended up managing some credit people, but I was basically an equity analyst. But there are a lot of different sleeves in these investment firms. And Melina's even alluding to some of this. They have very specific needs. And some of it is product knowledge. And so if you can spend a little bit of time thinking about which asset class most intrigues you, most interests you, and learn a little bit about that, that'll help you, I think, make your decision. And it'll also make you more informed during the interview process. Again, I've already said this, but to the extent you can, you need to promote the uniqueness of your program. What is it that you're studying that differentiates you from the typical MBA? And having said all that, and this goes back to Harry's point, I think you need to always have a fundamental investment idea that you can talk about. A company that, for whatever reason, because it interests you in some way, and you could say you're interested in it from the credit side, from the equity side, from their business model, whatever it is. Maybe even just the fact that they're an economic play because it's a big macro play. But have a fundamental investment idea that you like, be able to explain what the company does, why you like it, and if you're really prepared to be able to say, and I've been able to use some of the skills I've been learning to do some of my own analysis on it, and here's what I found. That brings it all together. So I'm not saying go in there and just talk about what your favorite libraries are in Python. That may come up. I think you also need to be able to say, I have a real interest in investing. I have a passion. One of my favorite words when it comes to job interviews, I have a passion for investing. And by the way, here's an example of how I am applying that just in terms of my own interest. So that's some suggestions. And I guess one other suggestion I'll make here is just something that Sandy asked me about. So I have an interest in ag tech. I'm interested in agriculture and I'm interested in ag tech because I think, like other sectors that have been disrupted by technology, agriculture is going to follow that. And there's a lot of big exogenous factors like climate change, water shortages, soil erosion, carbon footprints that are going to force technological solutions to our current agricultural setup in this country. It doesn't mean agriculture is going to go away as we've done it. There's still going to be big green tractors driving around fields in Iowa, but there's going to be alternatives to that. And I don't have a background in agriculture and I don't have a background in tech. So what am I going to do? So what did I do? I went onto LinkedIn and I typed in simple words like ag tech, real genius. And then I looked at what came up, and I looked at the backgrounds of those people. And it turned out that one person who's running a startup up here in the Hudson Valley where I'm located went to my undergraduate and worked at Merrill Lynch. I didn't know him, but we had two things in common. So I sent a LinkedIn message explaining why I was interested in ag tech. I've done research on it. I've read some books on it. I can talk fairly articulately about what's going on. Said, hey, looks like our paths have crossed. I'd love to I didn't say I wanted to work with you or invest with you or anything. I said, I'd love to meet you, buy a cup of coffee, and understand why you're in this field and what you think's going on, and maybe give me some advice about how I might transition into it. So I had a Zoom during COVID. I had an early coffee during early vaccination stages. We're still in contact. And my wife and his wife, we're all of us going out to dinner next Monday to talk about investment opportunities and who knows what else. Maybe nothing will come of it. But there was no secret there. There was no, I said, oh, I want to do ag tech. I'm going to, whatever. It was just basic work. And that type of networking, I can give you 4 other examples because I've spoken with someone who's starting the first mutual bank in the eastern part, well, actually in the country in a generation, that's going to be focused on providing credit to farmers. I didn't know this person. I never even heard of this person. I've had 2 meetings with them so far. I've talked to a bunch of people who are doing vertical farming technology. And so once you get into this, it starts to become self-fulfilling. One thing leads to another, but a lot of it is just really sending out a message that the person may not respond. That's okay. We can all deal with rejection, but if it hits, it's a flywheel and it's productive and things go from there. So I guess that's the other suggestion I'd have is, you're spending a lot of time on your studies. You need to spend a lot of time thinking about how you're going to translate those studies into your career. And part of that is spending a fair amount of time just simple networking, because I'll stop here with this. You're going to probably get interviews on campus with big companies coming in. They're going to take your resumes. They're going to go through them. They're going to proof them. They're going to send them around. And I did this, and you're going to take 50 resumes and winnow it down to 5. And you're going to interview those 5, and maybe, you'll hit and you'll get an offer from a couple of those from a resume. But I think if you think about the pie chart of how I'm going to develop my career, I went to an interview on campus and I got the job offer is a small percentage of the potential ways that you're going to find opportunities. Not even initially, which your stage now, but as you go through your career. I've never gotten a job through a headhunter ever. Doesn't mean I haven't talked to headhunters, but I've never gotten a job through a headhunter. So you got to think about that pie chart and the sourcing of these potential careers. And a lot of that comes down to just basically, as this next slide says, network with everyone and discuss their careers to broaden your own horizons. These are from comments that Dion and Lisa gave me. And also, you're at one of the most prestigious universities in the world. You have enormous access to conferences, to webinars. Take advantage of those. I know you're busy, and you may not want to do it, but that's a job interview too, in a sense. You're learning so much that will help you. So if you go to a club event, a conference, a speaker series, the information you're going to pick up will make you sound smarter, more informed, and you might actually meet someone you can follow up with and go from there. And, when you talk with people like this, again, you don't have to say, I want a job. You can just say, I want your advice, because people generally are willing to give advice because it doesn't cost them that much unless they're just, not nice people like me. So at that point, Sandy, I'm going to turn the last couple of slides over to you, and then we can go to Q&A. But Sandy's got some resources. I'm sure you've heard of these before, but I think she wanted to reinforce with you that these are available and can be very productive. Go ahead, Sandy.
Thank you so much, Steve. That was fantastic. And I just wanted to jump in here and give everyone hope and let you know that it's not too late to start building your network. Like, now is the perfect time, right? It's winter break's coming up. Let's have a plan. Let's meet and do that together. So I wanted to plug one of our programs. It's called the 2-Hour Job Search. I implore everybody to take an hour and watch this. It gives you a system on how to start building your network organically and reaching out to people and just having conversations. It even goes through, how do I have a coffee chat? What do I say in the coffee chat to a stranger that I never met? We even talk about how to structure the conversation very basically. And this is going to, like Steve said, right? On-campus recruiting is 1% of your life. You have to go out into the world and build your career from there. So this skill set is going to carry you through your entire career journey. And I'm not going to go into the whole thing because it really is, it's an hour long, framework. And I want everyone to watch the video, and I'm going to send it out after. But I'm going to go over the basics. You can go to the next slide.
Sure.
And the idea behind the 2-hour job search is that around 8 out of 12 jobs are actually found through referrals. That's just how it is. These jobs are not even posted, most of them. So that means that you have to do the work to find an advocate on the inside of that organization. And we have a very simple framework of how to do that. And I think I've talked about this with a couple of people, but the basic framework, really quick, you want to put your 40 company list down, right? And I'm gonna go in the next slide and share, where do I get those companies? Where am I finding those companies, right? But very simply, you're gonna put your 40 company list. The next thing, do I have an advocate? Is there an alumni there, right? So I'm gonna go on LinkedIn alumni, and I'm gonna search, and I'm just gonna write yes, no, yes, no, yes, no. Is there an alumni at that organization? The next thing I'm gonna do is I'm gonna rank, what is my motivation to work at this place? Does this place get me excited when I think about it? And I'm gonna rank it 3, 2, 1 and the motivation side. And then the fourth thing is I'm gonna go on Indeed or LinkedIn. I'm gonna say, is there a current posting? Because that's gonna be an indicator of, yes, this is a growth opportunity. This organization is growing, or no, they're not hiring, so okay. And the 2-hour job search, we're going to go through it in the video of how to rank it, but you actually come up with a top 5 list, and that's where you start, right? You're going to sort your list, and you're going to say, these are my top 5 companies that I'm going to target people at that company and reach out to them. And then that's the basic framework. And I wanted to give you a sneak peek if you haven't already watched this, but I really, buy the book or watch the presentation, because it really goes into deep about this framework. And it's very simple. It's kind of like it's a scientific framework. It really shows you how to dive into it and how to start building your network. All right, next slide. I did want to go over some more resources, 3 resources actually, that maybe you've heard of, maybe you haven't. So the MBA employment database, yes, I said MBA, not MS, because the fact is that there's a lot of MBA students. They work at places. So the most recent employment database, actually, I did some research before this. There are over 900 recent grads that are working in finance. 900, okay? You don't have enough time in the world to reach out to all of them, but they're there. The point is that the opportunities are there. So you need to go look at that. And that is located in your Canvas page under Pages. And if you don't know where that is, you can just email me, I'll show you. The second resource, and this employment database is amazing because you can filter by role, you can filter by international status. You can say, who are the companies that hired international students? You can find that there. You can also find, sector, everything. And everybody's email is on there. Very easy. The second thing I wanted to talk about is the large LinkedIn alumni group. And I put the link there. And we'll send this presentation out after. One thing that is really simple is you can actually figure out anyone's lifetime ID by putting their first initial, their last name, and their year of graduation, and putting @GSB. So I recommend you find someone on LinkedIn that works at a place that's interesting to you, put their lifetime ID together, and email them first before reaching out on LinkedIn, because you have a higher percentage chance of getting a response through email. Okay, the third thing that I don't think that a lot of people know is you can actually go to use the Watson resource. It's called the Preqin database for hedge funds and private equity funds. And it's through the Watson library, and Yasmin Sarah is the point person for electronic databases. And you can actually sign in with your Columbia ID, and you can search for filter functions, and you can find direct email addresses of people that work at those funds through this database. So I think this is another resource that you can actually use to reach out to people that I wanted to just quickly throw out to you guys. That's all I have for you today, but I did want to just let you know that there's still time. You can very much do this, and you can make an appointment with me. We can talk it through. And yeah, that's it. Thank you all.
Okay, thanks, Sandy, for doing that. I would just mention, I missed the Prequin reference there in that slide when I looked at it before. That is a great database. That's something we actually used in my previous work, because it gives you such a great profile of the hedge fund industry. I mean, in addition to names, you can learn so much about the funds and their AUM and how they're positioned and their strategies. It's a really, I don't know exactly the level of access you have, but it's a really great database if you have access to that. So we've gone about almost 45, 50 minutes, which is good. There's nothing that can't be communicated in an hour or less, right? Unless it's one of some great magnitude, some unbelievably important discussion. So I think you've got a pretty good sense of my view of the landscape, which encapsulates the emerging skills and where those skills are being applied in different disciplines, and then how I think the training and the learning that you're participating in now can position you to take advantage of those trends. And then the last part of it is, having said all that, going from a very macro to micro perspective, it's still just going to require, as I think Sandy pointed out, it's a very good statistic about how many jobs that launch your career are actually through referrals and not necessarily just coming about from a resume drop. And then the last thing is, I'm going to go back to that whole, no matter how that slide I made talked about early on, it may be frustrating at times. You may at times feel that it's too hard, but again, think about it as the journey. You're very young. I promise you're all going to have good jobs in your career. So think about the journey and how you're going to participate in that journey and make that journey interesting, and how you're going to impact people's lives and impact investments. When you think about it from that perspective, I think that'll give you the enthusiasm to go forward with the great degree that you're all going to earn. So with that, Milena, I'm going to turn it back to you. And if we have any questions, or you and Harry want to add any comments to anything that we've discussed, we can just leave it wide open from here.
I think we should just open the floor to questions, and no question is too great. No question is too trivial.
I'm going to stop sharing so we can go back to lots of.
Yeah, and for the students, this is your chance to ask specific questions too. Maybe things that you've come across during your networking experiences, during coffee chats, or during interviews. Any challenges that you've come across, anything that's worked for you?
All right, I'm going to ask a question. And as the students think about the questions they want to ask. So Steve, you mentioned at one point that the students, you recommended that they come and they explain their skill set, and so how it can be advantageous to an employer. When I talk to our students, I get the sense that a lot of them are very hesitant to tell the employer anything other than what they think they want to hear in a very narrow range. So can you just comment on that? When people are interviewing students, do they have tolerance for students giving them their own ideas about things, or do they just want students to talk in a very narrow context?
Sure. I wish I could say 100% is one way or the other, Harry. It really depends a lot on the institution and the interviewer. But if you think about it, by the time you get an interview, the interviewer knows a lot about you because they've gone through your resume, right? They know what kind of student you are. They know where you went to undergrad. They know where you grew up. So they understand quite a bit about you. And when you again think about it, the group of people that you're part of, there's been an enormous filtering process for you to get to where you are today. So that if you think about it, you're all, at least on paper, within a very, very narrow band of skills and potential if you just look at it on paper. So as an interviewer, what I want to know is what's the differentiator and what's the fit? And so I think, without turning it into too long a part of the discussion, if you can figure out a way as someone being interviewed to say, Well, one thing I'd like to start out with is the program I'm in. And, it's an MSFE and it is slightly different than an MBA. And name two things you think are different about it, what it is, and you could come up with that. It might be that, your ability to access data information and why you think that's important. So I think you can, it's probably, Harry, it's worth practicing that so that you don't go off in tangents. But if you had a 1 minute, or you can time yourself. So let me give you an example. On the sell side, one of the big events that happens every day is the morning call. And the morning call is where a select group of analysts for that day get to talk to every institutional sales person in the organization. And at a firm like Bank of America, Merrill Lynch, every retail financial advisor in the institution. It's a massive platform. It's a massive megaphone. And you've only got a certain amount of time to convey a fairly complicated message about why what you are telling them is important, unique, and will make them money, right? You got to do that. So we used to limit people to 3 minutes, and you'd be surprised how many people can't do that. And, people lose interest. But me, I used to use my voicemail system back in the day before we had device. I would go in and record. I'd write it. I'd get in early, and I would record it, and I would listen to myself. And it probably was at least 2 times, maybe 3. But I knew, and actually I targeted to be less than 3 minutes. But my point was that was a big deal, and I had that portion of what I was going to say practiced and rehearsed, and it was comfortable for me, right? So there's a famous American college basketball coach called John Wooden, and he used to say, failure to prepare is preparing for failure, right? So I prepared. So the answer to that question is, Harry, I think you can. I think you need to be able to know what you're going to say, and I think you ought to make clear to yourself that you can say it in 90 seconds or less. And then that gives the interviewer a chance to ask you more questions. Oh, really? You think this is a different degree? Well, let's talk about that. That's interesting to me. But I also think it shows some initiative on your part. And you are saying right off the bat, in a modest way, I'm different. Of all the other people you're going to talk to today, I'm different. So I actually think it's a huge advantage, assuming that you can tailor it to the interviewer, but at the very least, be able to customize it in such a way that it's brief and short and gets to the point. Okay, so I'm sure that I've spoken to some of you before, so I know Sarah probably has a question because she was one of the students I spoke with. This is the cold call thing. And I know, Iran, we spoke before, so I know you must have a question for me. And Max, I know you spoke with Lisa recently. So I'm sure all of you have either follow-up questions or insights that maybe you want to share with some of your fellow students. And actually, some of you I remember in the past, we met through the interview process. Bridget, we met, and Apostolos, we met. I've met a lot of you as I look through the names here that are popping up. So at the very least, you should say, hi, how are you? It's nice to see you again.
Yeah, hi, Steve. Thank you for your presentation. And yeah,
You're
nice to see you again.
nice to see you.
I have a question for myself and perhaps my classmates, because we are the first year master students. We don't have any prior working experience. For me, I'm interested in the research side of investment. I want to combine the fundamental analysis with my quantitative skills. And I read the news and some research papers, but the problem is I'm not sure what they are doing right now in the industry, for example, in a hedge fund like Vanguard or something like that. So I wonder if we can where we can look for the information for this, what they are doing, what their teams look like, something like that, to help us prepare in the interview.
Yep. Well, I understand the dilemma that you face too, because if you're a first year student and you're in your first semester, the amount of time and comfort level that you develop with all the new skills that you're learning, all the skills that I'm telling you are great, is still fairly limited. I mean, you haven't even completed your first semester. So it's hard in some ways to go in there to, even if you have an interview and say, here's all the stuff I know, because you haven't necessarily absorbed it all yet. So I get that. And I think in that case, I think that's why I said you have to be somewhat modest about it, but at the very least, and I'll answer the second question about detail, but at the very least, you can still explain why you made the decision you made to pursue this degree versus another degree. And that allows you to talk about some of the trends that you've observed. And you've heard people talk about these trends. So even if you can't necessarily say, I've done this and I've done that, you can say, I made a conscious decision to pursue this degree because I think these skills will position me better in the long run and make me more of a productive employee no matter where I go. But the second question is harder because you're really asking about what's the structure of a firm and how does it work? And
can I jump in?
Yeah, go ahead.
I want to hear what you have to say, but this is where the networking comes in exactly. You are there to learn, and the only way to learn is talking to people, period. You need to reach out, and I encourage, do not reach out to recruiters. Recruiters, in my opinion, have a very limited place here. You need to be reaching out to the team members and ask them, hi, I'm new. This is my first time learning about your field. Can you tell me what projects you work on? What's the day-to-day like? What are your biggest struggles? What do you do every single day to be successful? What do the most successful people on your team do? Those are the types of questions you need to be asking to people and simply trying to learn the space. And the more people you talk to, the more you're going to sound like an insider, because you're going to talk to one person, you're going to learn what they have to say. Then you're going to talk to the next person and hear what they have to say. And you're going to learn the nuances and the differences on this team and that team. And the best way to do that is just start reaching out to people and asking them questions. That's my pitch. But Steve,
I agree with everything Sandy said. I really do. I think taking advantage of the alumni network, there are so many Columbia Business School students on Wall Street. I worked with one at Moon, who's in Singapore. There's just so many that you can ask advice from. But I will say this, just as really simple. If you think about it, the investment world, I'm not talking about even the data world, because is invested in these in GICs, right? The global industry classifications. It's something that's done by the I don't know what this, I forget, there's a Bureau of Labor Economics, or I don't know. Harry, do you know who actually creates the GICs in the federal government, or the data? I forget. Anyway, so GICs categories are basically the fact that you've got automotive, you've got aerospace, you've got insurance, you've got healthcare services. Those are categories that were created by the government to track information. And every investment firm is organized along those lines. They're organized along some type of, once you get into it, I mean, if you're FX, it's different. If you're economics, it's different. But if you're doing credit or you're doing equities, you're going to find pretty quickly that you are placed in a sector category. Sectors are GICs. So that's why I said, find out a sector you like. So look, if you really are interested in a sector of some sort, let's say, I doubt it, but let's say it's automotive. Okay, that's huge. You've just filtered an enormous amount of information out. Now you can go in and find some people, and I'm sure there are Columbia grads who are working in the automotive industry, something like automotive investment industry. You're there. That's it. So that's one way to do it. Just figure out what you're interested in. It doesn't have to be one sector. It could be 5. It could be broad technology. It could be new technology. It could be software. It could be SaaS companies. So once you have an idea of what's interesting to you, that's a huge filter that allows you to then go in and look, as Sandy said, contact some individuals that are somehow related to that area and say, hey, I'm really interested in your sector. I'm a graduate student at Columbia in this program. I'd love to get 15 minutes of your time, if you have it, to just help me understand a little bit about how your sector works and how you approach it. And then the basic configuration is, once there's a sector, whether it's the buy side or the sell side, or even private equity might have a broader purview as in the buy side, but you specialize in a handful of areas. There's a senior person, and then depending on the sector size, there's anywhere from 2 to 5 junior people supporting that senior person. The senior person is normally a partner or an MD. The junior people go from anywhere, executive director or director, vice president, associate, and analyst. And those are the slots that you're looking to fill on the research side, whether that's buy side or sell side. So basically it's a sector structure, someone at the top of that, an MD, and then analysts ranging anywhere from vice president, associate, and analyst supporting that person. That's the basic structure. And they spend all their time becoming experts in one or a handful of different sectors or asset classes, but that's the broad view. But I think what Sandy said is a very practical way to approaching it, Iran.
Thank you, Steve and Sandy. That's really helpful.
Sure.
Hi, Steve. Sorry, my
How are
computer
you?
didn't work. But yeah, I was actually planning on reaching out to you individually, but because what I have found is, and I know sort of networking is part of the answer to this, I'm interested in like global macro research. So either global macro hedge fund or, working at a larger asset manager that has like specific, a global macro fund. And my understanding from talking to people is that like these types of jobs are sort of few and far between. And so sometimes maybe the best job I can get is like the job that will set me up best for that kind of job.
Yeah.
And I was wondering sort of your advice
Sure.
on.
Sure. I mean, there's a
what
couple of
you're
things and we should follow up. We can go into more detail, but there are certainly funds that have a strong macro style, and some of them are really very macro driven, or some just have macro as part of supporting the structure that I talked about, which is sector. But there are some funds that are just pure macro, and that's what they're playing. They're probably playing, changes in treasury yields and things like that, or FX. It's a slightly different business. I say the one thing is you're going to be competing more against PhDs in that area. That's number one. So think about that. It doesn't mean that people with master's degrees aren't hired in that area, but you are slightly moving into the PhD realm. I wouldn't necessarily say, global macro is probably a bridge too far for anybody. Typically, you do macro in the same way that you get shunted into sectors. If you're macro, you're going to get shunted into US macro or EM macro or European macro. And then with that, you could end up at, a lot of these firms have specialists at the country level. You could be a UK specialist, or you could be a Japan specialist. So you're probably not going to get a global macro job until you've been around for a while, when you work your way up through the echelons. But I think most big firms, so I think you may have had Vanguard in recently. If you go to their ISG website, they've got all kinds of people doing macro there. If you want to work at a place like that, they specialize across all kinds of macro disciplines. Even at the hedge fund level, again, there are a lot of people that are very specialized and do a macro style or macro influence style. So I think, for you, Bridget, you solve part of the problem is when you go into these, assuming you find people who have slots to do this, I think you just need to go and tell them why you're so interested in macro, ultimately global macro, how that has attracted you and how you think your degree fits to it, and then tailor it from there. But we can have a more detailed discussion about that if you want to follow up. But I think
Yes, I will.
It's not impossible to get a job as an economist across all the disciplines that I talked about, sell side, buy side. You're not going to get that as a trader, and you're not going to get it in the pure data analytics, and you're probably not going to get it as a banker. But certainly sell side, buy side, long only hedge funds, they have tons of economist roles, and they're not all PhD roles.
Okay, great. Yeah, I will email you. Thank you.
Thank you. Look forward to it. Okay. Anybody else? And as Lenny said, I'm happy to have one-on-one discussions too. It's something I've done with a handful of you so far, and hopefully that has been productive. Some of what you heard today was repeated in those one-on-one discussions, but now that you have a little bit of background as to how to approach it, if you want to talk more specifically, like, well, I don't understand exactly what it is the sell side does. It's different than the buy side. How should I position myself? We can talk about that. Or I'm not exactly sure why there's such a big difference in your mind between what the hedge fund does, what the buy side versus a long only, and what the skills are there. We can have those discussions too. Okay.
Thank you. Thank you, everyone. Thank you, Steve.
Thanks so much, Steve. This was really great. I enjoyed it, and I hope everybody, comes out of this with a little bit more clear vision and understanding of how to search, how to present themselves, how to understand their value proposition, and also develop their goals. And again, we're all resources for you, Steve, myself, Sandy, Harry, and also talk to one another. You'll learn from each other a lot throughout this process, and you will become each other's network ex post. So take advantage of that as well when you're idea sharing and collaborating, and help each other prep.
Good. Listen, thanks everybody for your time. I enjoy speaking to all of you, and I'm available for one-on-one sessions. So hopefully we'll keep the dialogue going. I think, assuming this one was deemed reasonably successful. We'll do some more of these next year. I'll talk to Harry and Sandy and Elaine about it. But what I'd like to do, so you don't have to just keep listening to me, is bring in some outside speakers. As I mentioned, Perry Boyle, I already spoke with him. He's more than happy to do this. That would be on the investment side. And I'd like to get someone from one of these data groups I mentioned to talk a little bit about them. Okay,
Great.
great. Thanks, everybody. Have a great afternoon.
Bye. Thank you, Steve. Take care.
Bye.
Thank you. Bye.